If you can't beat them, then you pop them. You can't man them, then you mop them. You can't stand them, then you drop them. You pop them, cause we pop them like over red and vodka. C3, okay, a millionaire. I'm a young money millionaire.
All right, welcome back. Definitely exciting week ahead. You got quite a few things going on here in the U.S. I'm joined here, of course, with my colleague, Matt Aggie. Matt, great to see you. And our guest today is Nico Smid. Nico comes to us with a significant background in the Bitcoin mining space. Definitely going to be great to dive in on that. Why don't we, everybody knows who Matt and I are, but Nico, why don't we turn it over to you? And again,
Sure.
Thank you for joining us. Why don't you give a little overview about yourself, and then we can kind of dive into a lot of the underlying questions.
Sure. Well, thank you for having me. I really appreciate it. So Nico Smid, I'm Dutch. I grew up in the Netherlands, hence the slight Dutch accent in my English. But I live in Argentina, as I mentioned in the brief just now. I moved here 4 years ago. My wife is Argentine, so love brought me here, let's say. And I got into Bitcoin in 2017 and into mining in 2021. I have a background in economics and international business development. And when I started investing in the mining industry, I saw a very young and fast-growing industry that had a lot of opportunity to professionalize and to develop services in that industry still. So that's when I thought, okay, this is an opportunity here, and I decided to start my own company, Digital Mining Solutions. And the solutions or services that we offer are threefold. We do a lot of market intelligence. So we write articles for third parties, do deep dive reports. We have an annual review coming up early January. We provide master classes and also have a popular newsletter that we send out on a weekly basis. We look at mining economics and innovations in the space. And then the core of the business is strategic advice and executive coaching. So we optimize business models, we help with investor pitch decks, do project benchmarking, etc. And then the last service is around matchmaking of investors and site operators. So we do brokerage, let's say, and also evaluate site opportunities and do due diligence on behalf of clients.
Awesome background. Thanks for that overview. You're the perfect person to have on to chat about what Sean and I have been talking about the last couple of weeks is just the overall state of the industry. We've seen, hash price at record lows. Fees are very low. Hash rate is screaming higher. And so I wanted to ask you about just your take on the current read of the market and of Bitcoin, the network, and how those dynamics are playing out.
Yeah, I think post 2024 halving, we've seen a very different hash price than before, right? So in the previous cycle, you saw a hash price ripping up in the later stages of the bull market because Bitcoin price would outpace hash rate and thereby difficulty. That didn't really happen this cycle, let's say. So post 2024 halving, we saw the drop because the subsidy got cut in half. And ever since we've been in a range between, let's say, $40 and $60 per petahash per day. And recently we dropped below that 40 level and even went as deep as 35, the lowest we've seen in history, which is obviously tough for many miners. And I think you mentioned the reasons already, like transaction fees has been below 1% of the total block rewards, which is very different from what we saw in 24 and 23. But next to that, you see hash rates ripping, while Bitcoin price is kind of neutral or slightly negative year to date. So that's it's very tough, but it also brings innovation and pushes hash rate to there where energy is cheap in the end, right?
Yeah, so I've been seeing the C word a lot with mining, capitulation, right? Capitulation is the word.
Yeah.
So we haven't really seen that though. Hash rate's still growing, but I saw a stat maybe interesting. The public miners have only added something like 80 exahash year to date, and that seems fairly low relative to the overall hash rate. And I don't know if that's accurate or what you're hearing.
Yeah.
Like who's filling that gap then if it's not large public miners, if they're distracted on other things?
No, that 80 sounds very low because Bitdeer alone has gone from, I think it's around 7 exahashes to 41 exahashes. And you see other miners that have been deploying quite aggressively. So I think that number is a bit low, but I think where in the past, like the previous cycles, you would see hash price drop and then miners capitulate hash rate going offline. I think that's not what you're seeing anymore. Because if a miner is in distress, these machines just keep on running and they're being acquired on the rack, let's say, in order not to lose those power contracts. And also, what's interesting is that Coinmetrics has this chart that shows the efficiency of the network overall, so the average efficiency, and the amount of joules per terahash has been going up. So that means efficiency has been going down, which is very interesting. And to me, that signifies that you see more, older generation miners being distributed among the globe and being plugged in where energy is cheap. So I think it's a more globalized hash rate. It's miners that capitulate but don't go offline necessarily. And I refer to Bitdeer shortly. I think it's also the ASIC manufacturers that are deploying at a more aggressive rate than they have done in the past. So they're becoming big self miners.
Yeah. No, I mean, you broke it down pretty good there. You know, I'm just thinking here, like from holistically, like when I started in this early on, it was one of those things that so I got it. I was in mining 2017 to like end of 2019. And I mean, it's crazy to see how much things have changed. I mean, now you have it, you know, where you're seeing more miners are really the hash rate, as you have said, is a commodity, if you will. You know, in practical terms, how does that correlate to everything going on right now? Because I think initially, you know, it all comes back to, I think the commodity here is power. But then, you know, how does all that come together with the hash rate component here?
Well, the hash rate itself can be seen as a commodity as well, right?
Right.
I chatted with Matt about that shortly. You see these financial instruments popping up. There's hash rate marketplaces where you can buy spot or forward hash rate. So in that sense, hash rate is becoming more of a commodity, and you see more financialization of the computing power itself.
I could almost see like a market, like, so from my trading background, I could almost see a market where you're trading the hash rate, some type of hash rate contract against a power contract like PJM or something like that here in the US. Because again, like, I think, you know, it's something to really dive into. Like, you're down in Buenos Aires right now. Like, you know, how is that different in power than what we see here in the US when it comes to miners?
Well, in Argentina, the mining industry is not huge. I expected it to grow faster, but it's the biggest opportunity here is in natural gas, and the oil and gas industry is just it's a complicated industry, as they would say in Argentina. But here you see a lot of stranded gas that's being extracted. That's coming out either when they extract oil as associated gas and being flared, or it's really stranded because there's a lack of pipelines. Those are in the making, let's say. I think the dynamics here, therefore, are very different from what you see in the States, and that applies to each country, and in the US to different states as well, right?
Yeah, no, for sure. Matt, turn it.
Yeah, just to dig in a little bit on the hash rate as a commodity. I mean, can you just back up a little bit, maybe for our audience who's not familiar with that instrument, and maybe how practically are miners using that as a tool to manage some of the broader financial picture?
Yeah, so you see it growing more and more as the industry matures. And yeah, at these marketplaces, there's a buyer side and a seller side, right? And on the buyers end, you see investors purchasing hash rate because they want exposure to hash rate, but don't necessarily want to invest in ASIC hardware or data center operations. So that's one, I would say, type of buyers. Then you also see miners buying hash rate, and that can be for different reasons. You have these companies that co-locate or host clients, and when they are not able to meet their contract obligations and have a lower uptime, let's say, than they were contracted for, that's a reason why they would buy hash rate to maintain that hash rate that they are contractually obliged to provide, let's say. And I've seen also that there's these miners that raise funds. They get these funds from the investors and they start building out sites. But yeah, building out the site, if you're in an ideal situation, it takes 3 months, but it can take much longer. In the meanwhile, they can purchase hash rate to put their money to work before they purchase the ASICs. So that's another profile, I would say. And then on the seller side, there's different reasons to sell. Some sell forwards in order to lock in a hash price for a fixed term. So that way they reduce their volatility, or the volatility in hash price, let's say. And there's miners that sell hash rate on the spot marketplace to earn a premium, because often there's a premium being paid as the buyer is somebody that doesn't necessarily have ASICs or a data center running. So I think those are the main use cases, I would say. And then maybe on the sell side, on the forwards, the last one that just came up, like you see miners selling their hash rate forward in order to get that Bitcoin upfront in order to be able to grow and invest in their fleet, to upgrade or to expand their fleet. That's another use case.
I mean, I think adding on to what you're talking about, like, this is a great segue to the mining companies are really now also saying, hey, it's tough times, and we need to look at how we can monetize, bring in revenue. And so the whole thing, now you see all this, the HPC, the AI, all of, that are bringing higher margins. Are you interpreting that more as like, this is a short term, a long term, or like, is this kind of going to be the new norm where you have some Bitcoin mining, but you use the AI piece to offset the cost on the Bitcoin side, etc.?
Yeah. So I think AI HPC is not for everybody, right? First of all, you need to have reliable power, but next to that, you need access to bigger power lots and quite some access to capital, because compared to a tier 0 or tier 1 data center mining facility, these tier 3 or 4, they're very expensive because of the redundancy that's required. Also you see that the type of clients that they're onboarding, whether it's to co-locate GPUs or to provide compute power to, these are longer term contracts also. Like you see between 5 and 15 years even, while in mining like a regular contract is between 1 and 3 years, let's say. So I think it's a longer term trend, just because of the nature of the investment, but also the nature of the contracts. But I don't think Bitcoin mining will disappear. Bitcoin mining will be pushed more to the edges, let's say, where power is less reliable, where there's a need for demand response on the grid, where power is stranded or underutilized, those type of cases. But I also think that AI and Bitcoin mining can coexist very well because of that flexible layer that Bitcoin mining provides. It allows companies that need a firm load for AI, HPC, to participate still in demand response by having that flexible layer. But also when they scale, they can use Bitcoin mining to monetize that power that's available while they're building out. So I think it's a very useful tool for many data center operators and builders.
Matt, really quick, one thing that actually just came into my mind was what we talked about last week. Was we kind of touched on it, the nuclear topic, and it was interesting. I've been looking more and more into like the whole nuclear topic and what's going on there. Is that popular outside the U.S. energy wise, or is that, Nico, is that more like, what do you see?
Popular, I don't know, but it's like,
Well,
I'm from Europe, and it's spoken a lot about, especially because there were some nuclear plants that went offline in the energy transition, but it was a bit too early, I think.
Yeah.
So yeah, you see it's being talked about, but I think AI HPC will go after that nuclear power because of its high capacity factor. It's very reliable power. So maybe if Bitcoin plays that flexible layer, it has access to that nuclear power, but I think it will be outbid by other types of compute.
So just not to bounce around, but I missed it earlier, but with private companies kind of maybe pivoting to higher margin things like AI and HPC and trying to weather the environment. We were talking about recently, China still kind of reemerging as a major miner, and you're kind of getting to where maybe it's nation states or national energy companies or national strategic government sponsored type national security programs are being talked about in terms of investment in this area. Do you think Bitcoin is playing a role, maybe quietly, in some nations around the world in that regard?
Oh, definitely. Yeah, I mean, you see it in Bhutan as a very clear example. And the other day, also in Laos, they announced that they work on these renewable projects that they want to monetize by crypto mining, as they called it. So I think Bitcoin mining will play a role. You see here in Argentina also that YPF, which is like the national oil and gas producer, they have a site where they sell gas to miners. So I think either directly or indirectly, different countries will participate in Bitcoin mining. And I think also for many countries, Bitcoin mining is a good entry into the data center space, right? You can go from Bitcoin mining to other types of data centers and eventually upgrade or learn about data center operations to be able to receive AI HPC operators.
Wow. No, I mean, honestly, it's everything that's going on. Like, I think you're seeing more, like, you're seeing it spread to other countries. Now, obviously, here in the U.S., you haven't seen the government get into mining yet, but stay tuned. Who knows what's going to happen there? Maybe we will. But I mean, based on the current shape of the hash rate forward curve, I mean, what does that what does the market appear to be pricing in for mining economics through 26 and 27?
Yeah, so the forward curve that's being published by Hashrate Index, it goes 6 months out, and I checked it this morning, and it was at $35 per petahash per day. So it doesn't provide a longer term insight, but it does provide a useful insight in order to compare to your own projections. We do projections quite regularly, and not too long ago I did projection of hash rate based on the growth month over month this year. And if you then project out towards next year, if Bitcoin doesn't recover above that 100K level, then hash price will stay below the $40 per petahash per day. And so that to me tells me like either Bitcoin needs to go up or hash rate will come offline, because being at below $40 per petahash per day, I don't think it's a sustainable situation that many miners can withstand for a year or longer.
And you've seen some miners, I guess, they're often very innovative with their strategies for making revenue or earning revenue. You've seen more starting to hold Bitcoin on their balance sheets. Mm-hmm. Are they going to begin to sell? Are they going to be forced sellers soon if things don't recover? Or how do you see the miners holding Bitcoin trend playing out?
Yeah, I think there was some. I don't recall who sold. I think it was Core, but there was some started selling already a bit. I think it's the easiest way to get liquidity, right? It's easier to sell your Bitcoin than equipment or complete facilities. So that's something we might see. We've seen it in the past as well. But with these Bitcoin lending products, you also see a lot of miners putting up their Bitcoin as collateral to access liquidity. Many use that to buy new machines and then start mining, and then if they get a margin call, they can top up their collateral with the freshly mined Bitcoin. So that I've been seeing in the industry. But I mean, it depends how deep we go, and moreover how long we will stay at lower levels. So I think that's important. But as a miner today, you need to be very sophisticated. You need to either trade energy or resell heat if you're in colder climates, or integrate other types of businesses like AI, HPC, or if you're a smaller miner, you can integrate hosting services, for example, to gain a dollar denominated income stream to be able to hold on to your Bitcoin at these moments that you actually need to hold on to it.
Yeah, I mean, you bring up some valid items. I mean, if you were talking to some, we were talking to last week was somebody who's doing like the self mining, basically small desktop miner, like see if you can get a block here, here and there. But the average person, I think, that's thinking about potentially like, price is down, maybe I can get some equipment, start getting into mining. I mean, this is actually becoming like, it's not for the average person anymore. Like, I mean, the amount of effort and work that goes into, and also technology, I mean, it's super capital intensive. Mm-hmm. I mean, when I was in it, there was shortages of transformers. There was all kinds of shorted PDUs, I mean, is that still prevalent in the space, or how is that held up?
Maybe so. To touch upon the first part, like mining is not for everybody. I also agree. I think the hosting is becoming tougher and tougher, right? Like if you pay 7 cents per kilowatt hour, like either you need to optimize with a stack strategy or in a different way in order to make that a viable option. Like the clients I work with are usually small and medium-sized miners. I always like to recommend, like if you're at let's say 4 or 5 megawatt threshold, and invest in infrastructure, because that's where more money is made than just putting your ASICs at different facilities. And then the second part I kind of lost now while I was explaining.
No, it's more really around the equipment, like, and all that. Like, you have the amount of equipment that goes into this. I mean,
Oh yeah, so the when I see shortage, I've heard about shortage of turbines, gas turbines. And I guess the AI HPC overall is a comparative for similar inputs that miners need, right? Like PDUs and dry coolers, perhaps, but also labor. It's very appealing for Bitcoin mining operators to accept a job in maybe a more stable environment at a hyperscaler or whatever. So
Yeah,
I think that competition from AI HPC is not only on the power side but also on the input side.
I could see that. I mean, I definitely could see that. The question. So with HPC versus Bitcoin mining, ASIC mining, HPC now data center wise, HPC is not using cooling. Like it's not using a cooled a traditional data center where you'd have a cooled data center. In most of these mining facilities, this is all air cooled. It's just moving air over it because you can't use refrigeration to cool it, just given the quantity of machines that you're running. Does that same concept apply on the HPC side?
Well, I think overall you'll see both HPC and Bitcoin mining moving more to hydro cooled or liquid cooled setups. I believe like the latest generations, it's all hydro cooled or liquid cooled at least. In mining, you see it's increasing, but you still see many opting for air cooled just because of the return on investment. So those machines are cheaper and the build out is cheaper, so you make a quicker return on the investment. And I guess like that has to do with the shorter or relatively short cycles of So I think if you have a longer term horizon, then like it makes completely sense to go for hydro cooled. Also, the projects I'm seeing in Scandinavia, they're all hydro cooled because of the reuse of heat. So liquids, they conduct heat way better than air. So air cooled for a reuse of heat is not always the best use case unless you want to use it as a space heater, right? So
right.
Yeah, just to put a plug in for home miners, I'm going to go the opposite way on that one. I like my home miners. I live in Houston. I don't really get the chance to use it as a space heater very often, but I did this weekend. My daughter's room was cold, so I moved my little can into her room, and it made a difference. So I talk to it, I coach it, I look at it. Anyway, it's fun to participate.
Definitely.
So I guess we had talked about a lot of trends going on, and there's a lot of complexity, a lot of moving parts. The economics of it are pretty harsh. There's a lot going on with AI, HPC, but there's still some pure play miners out there. I guess if you could try to predict, recognizing that's very hard to do, where do you kind of see long term or even medium term the mining industry evolving towards in the next few years?
Yeah, so I've mentioned this before. I think the miner of the future might not necessarily have mining as its core business, but mining is going to be like an energy tool or energy management tool that's being integrated into other types of businesses, right? So it's that flexible layer for AI HPC. It's a company selling heat and using mining equipment to produce that heat. It's factories that use power that's idle, let's say, to monetize that. So I believe in the far future that will be the case. Like the pure play miners, I believe will only be able to continue to exist where the power is less reliable. So that unreliability, let's say, is a problem for many other industries. So that can be, for example, the flared gas or very remote generation. Or you see mining behind the meter, for example, like when there's a power generation that's waiting for a connection to the grid. that's where you could see miners participate. So yeah, going there where others cannot. So that's the future I'm seeing.
Wow. No, I think, Nico, it's obviously we're coming up on time here, but what I wanted to ask was, if you had, I would say, where do you predict the end of 26 from, what global or geolocation do you think mining is going to grow the most in?
Well, yeah, you've seen Russia and China picking up. I think it might, like, there will still be hash rate added in the US, but the growth rate might slow down. I mean, there's opportunities worldwide, but I think, like as I'm seeing here in South America, it's the uncertainty that comes with certain markets that impede it from exploding without government involvement, let's say. So yeah, I think you will see it worldwide. In the Middle East, you see growth. You'll see some continued growth in China and Russia. In Africa, there's countries like Uganda that you don't hear about yet, but there's a lot of hydropower there as well, and they're onboarding miners. Nigeria, there's a lot of gas. So I guess more and more countries around the world will wake up. So that's what I'm seeing.
No, that's fantastic. Well, Nico, if people want to reach you, what's the best way to get a hold of you?
Yeah, so my website is called digitalminingsolutions.tech. There also we publish all the newsletters that we put out. So we have a big library of content there. We've published over 200 articles, so make sure to check that out. And then I'm very active on LinkedIn, a bit less on X. I used to be very active on X, but moved more to LinkedIn because that's where I find more valuable engagement on the mining part.
Very cool. Nico, thanks for coming. Matt,
yeah, thanks for having me.
And yeah, we got some exciting guests coming up after you, Nico, but always great to continue learning about all the different pieces and really how the sauce is made in when it comes to specifically Bitcoin mining.
Yeah, well, you keep on learning. It's never a boring day, so that's why I was able to write so much about it, because it changes so fast, and it's so many aspects that's involved in mining. So it's very fascinating.
Love it.
Yeah, thanks for coming on, Nico. Appreciate it.
All right, we will be in touch. For those listening, make sure to check out 21rates.com. And this is Sean Ristau with my co-host Matt Aggie. Nico, thanks for coming on, and we'll see everybody next week.